Hello everyone. Let's work through problem P2-6B, which is a problem dealing with liquidity, solvency, and profitability ratios. Now, we have some information for the Peterson Company, and we need to compute the values and ratios that appear down there at the bottom, and you can see me moving my mouse. We'll answer all 7 of those items. I'm using Excel as the canvas for this demonstration, so I will move back and forth between the two screens. Alright, well, let's look at the first one. Compute the values and ratios for 2004. How about working capital? Well, to do working capital, we need to look to the balance sheet. We specifically need to look to current assets and current liabilities. So for 2004, we need to pay attention to that number to the left of my mouse, which is 446,900. Current liabilities are 243,500. So let's solve that one. Let's label this. And I'll just abbreviate it. We know working capital is going to be equal to current assets minus current liabilities, right? So let's just jot down those two numbers, the current assets. Was it 446? 446,900. And current liabilities were where's the number? 243,500. Okay, so let's just do the subtraction. And just to make this look a little bit more legible, we'll make this the current assets, this current liabilities, this working capital. Okay, and I'll just align that. And that's the answer that we're looking for to number A. Alright, in B, we need to compute the current ratio. Okay, let's look back to the problem. What is the current ratio? Current ratio is what? Current assets divided by current assets? Divided by current liabilities? So we already have that information. Let's just copy this here. Only now, let's do the division and see if I did that right. And then we would probably want to take that to some reasonable decimal place, like just one decimal place. So there's our answer to B. Okay, let's take a look at C. What do we have to do in part C of this problem? Part C is determine the current cash debt coverage ratio. Okay. The cash provided by operating activities for 2004 was $190,800. Now they also tell us that the average number of shares during the year was 50,000 and the stock price was $30. Okay, well the current cash coverage ratio, we have to determine what the cash provided by operating activities was. So if we type that in. I'm going to indent this so we can see what we're doing here. In fact, I think I'll move it up there. And we'll say, let's indent that a little bit more. We'll say that was equal to the 190,800, right? And to determine the current cash debt coverage ratio, we then need to figure out what is our debt. Well, our debt is made up of, let's look at the current liabilities. We've got 243,500, 107,400. Is that relevant? That's our current liabilities. So let's jot those numbers down. We'll take the beginning and the average of current liabilities. let's label that current liabilities beginning. We'll indent that again. And the beginning one was 107,400. And then let's create a current liabilities at the ending. And the ending balance we know from above was equal to 243. So we sort of turn all of this into a nice format, easier for us to see. Shrink these a little bit so we can still read pretty well. Okay. And having done that, then, if we determine the average, current liabilities, we'll just use the average command. Put that together. We've got 175. And let's determine the end result. Take the cash provided by operating activities divided by our average current liabilities. We want to format that again, right? And we can paint that there, and we calculate 1.1 times. Okay, so that's the answer to part C. What do we need to do in part D? Part D says debt to total assets ratio. Well, that's easy. What's debt? What's total assets, right? Okay, so the debt is equal to how much? Right there, total liabilities represents our debt, so 453,500. Our total assets, 107,200. Right? Determine the ratio, just one divided by the other. We use the same formatting from here, and we've got a debt to total assets of 0.4. Let's show that as a percentage, so it's about 42%. Okay. How about the cash debt coverage ratio? Alright, cash debt coverage ratio again uses cash provided by operating activities, so let's just copy this down. Only now we're going to compare that to the total debt, right? So we need to consider the 453. Let's do it this way. Debt beginning and debt ending. We know the debt ending is the 453 from 453,500 from above, right? That came from, where's our total debt? Right there. So we need the beginning, which should be 307,400, just to the left of my mouse there. And let's average that again. I'll use this formula and change the title. This would be average total debt. And let's compute. Now, instead of the current cash debt coverage, we'll compute what would be called the cash debt coverage, because it considers all debt, not just the current portion. And the formula's off a little bit. We put it there, we get 0.5. So it's, we can think of that as times. You can think of 1.1 as times. And you can think of the the current ratio is also 1.8 times. Okay, two more. F is asking for what? Earnings per share, I believe. Yep, F is earnings per share. So how do we declare, or how do we determine earnings per share? Well, we need to know the earnings. Stock price was $30. Where's our earnings per share? 50,000 shares outstanding. So where's our earnings? Right there. Net income, 118,100. That's what's relevant. So we take net income, divided by the number of shares. To come up with earnings per share. Okay, so earnings per share would equal divided by that, and that dollar amount is $2.36. Okay, now in this case, probably the best format to use would be the dollar there, as well as the dollar here, so that we know we're doing a calculation in dollar terms. Now, the last item we were asked to do is the price to earnings ratio. Okay, and they gave us in the problem that the price is $30 at the end of the year. So, market price of the stock is $30. Let's format it like this. And we know the earnings per share is equal to what we previously calculated, right? Format that as a comma. So our PE ratio, or PE multiple as it sometimes is called, is trading at 12.71. And that takes care of all of the answers.